a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
ETFs that focus on millennials. Well, that's what we're going to focus on here with our ETF Research Director, Nina Mishra. So, you say this millennial market is a hot market.
Yeah, it is. So just to start, millennials are people who are born between 1980 and 2000.
Okay.
And according to Global X, there are over 90 million millennials. So these are people in their 20s and 30s, making it the largest generation in the US.
Okay.
So now older millennials, people who are in late 30s, nearing 40s, they already have a lot of spending power. Younger millennials, they are entering the job market now, and the labor market is so good. So their wages will rise in the coming years, and their spending power will also rise. And in fact, according to Accenture, millennial spending will rise to $1.4 trillion annually by 2020, making it accounting for about 30% of total US retail sales. So that's significant purchasing power.
And they're going to inherit a lot of money too.
Yes, according to RBC research, they will inherit trillions of dollars over the next few decades.
Well, I was born at the wrong time.
So it makes sense to invest in companies which will benefit from millennial spending trends, companies that are favored by millennials. And there are two ETFs that target those companies that focus on millennial spending, and they have done pretty well since their inception. Surprisingly, they have not seen much investor interest, so I thought I would highlight them and explain the differences between those two.
Sure, let's see what they have in them. The first one, Global X Millennials Thematic ETF. So this follows a particular theme?
Millennial spending theme.
Oh, okay.
So the ticker is MILN, Millennial. This made its debut in May of 2016. It charges 50 basis points, and as I mentioned, not much investor interest, surprisingly, despite excellent performance. 49 million in assets under management so far. Now, if you want to learn more about the ETF, you can go to the quote page on Zacks.com. Learn all the details, expense ratio, as I mentioned, 50 basis points. And you can also go to external homepage of the provider, Global X, to learn more about this ETF. This ETF focuses on US companies.
Okay.
And these are companies that will benefit from millennial spending trends. So this has a broad range of categories, including social media, entertainment, food and dining, clothing and apparel, health and fitness, travel, education, housing, home goods, and financial services. If you look at the holdings, they all make a lot of sense. Walt Disney, Facebook, PayPal holdings. PayPal is important because PayPal owns Venmo, and the app which is very popular with millennials, with younger people.
Passing money around.
Yes, it has more than 40 million users now. Starbucks, very popular with younger people. Some REITs, Amazon, Costco. All these holdings make a lot of sense.
Yeah, it covers a broad spectrum too.
Yes, yeah, a
Apparently.
broad spectrum of companies that will benefit from this millennial spending theme.
Yep. Principal Millennials Index ETF, GENY, the ticker, that's the next one.
Yeah, Gen Y. So millennials are also known as the Generation Y.
Yeah.
So that's why that ticker. So this also holds companies which are impacted by spending and lifestyle activities of the millennial generation. This also made its debut in 2016, in August 2016, just 3 months after the earlier one. This is slightly cheaper, 45 basis points in expense ratio. And this also hasn't seen much interest from investors. It has just 20 million in assets so far. Now, if you want to learn more about this CTF, you can go to the quote page. And from there, using the link on Zacks.com quote page, you can go to principal web page for the CTF. Now, the main difference between this ETF and the Global X product is this holds a lot of non-US companies.
Okay.
And millennial spending is a global theme. It's not restricted to the US. So if you look at the portfolio composition, 52.7% US stocks and 47% non-US stocks. Now this is important in explaining the performance of the two ETFs, the relative performance. Looking at holdings, since it holds a lot of non-US companies, you will see those big companies here. Adidas is the top holding. Fast Retailing is a Japanese retail holding company. It holds, its main subsidiary is Uniqlo, and we have a big Uniqlo store on Michigan Avenue, North Michigan Avenue.
Chicago here, yeah.
That's very popular with the millennials, casual wear. Then this Lexan FinTech is a Chinese online finance company. Facebook, Discover, PayPal again, makes a lot of sense. Home Depot, Lululemon, which is popular, very popular for its athletic apparel. And Lululemon has been such a hot stock over the past year or so. So again, all these holdings make a lot of sense. But remember, Global X products focuses on US companies, whereas this is half US and half international companies.
You notice how most of the companies in these ETFs focus on entertainment and leisure, nothing that suggests work. I find that kind of interesting.
It suggests spending, so because spending power will rise and they will be spending a lot on these in these stores and these companies.
Areas.
So those stocks are going to benefit.
So let's compare these two versus the S&P since inception.
So since inception, both these ETFs have significantly outperformed the S&P 500 ETF. The Global X product is up about 48% since its inception in 2016. The principal product is up about 47%, very good performance, whereas the S&P 500 index is up about 34% during this period.
And then comparatively speaking for 1 year.
Now, I included this chart because there is so much difference in their portfolios. One focuses on the US companies. The other one is half US and half international. And we know that US stocks have done much better than international stocks because of all the trade war concerns and everything, particularly of late in the past month or so. So that is the reason why the Global X product has done much better over the past 1 year. It is up about a little more than 10% over the past year, whereas the S&P 500 index is up about 4%, and the principal product is up just about 1% over the past 1 year. So if you believe that US companies will continue to do well, maybe focus on the Global X product for the time being. But if you think that it is time to buy some of the international companies that have been beaten down due to trade war concerns, then maybe look at the principal product.
Do you think these type of ETFs are ones that are going to grow over time?
Many thematic ETFs have grown significantly since their inception. Themes like robotics, cybersecurity, artificial intelligence, those are very popular with investors. This surprisingly, maybe investors are not so much impressed by the theme. And as you also mentioned, it doesn't suggest about working. But this generation is, they have a lot of purchasing power, and many of them have significant incomes, which will rise.
They do have jobs.
Yes, which will rise in the coming years. They are not just sitting on their couches and doing nothing. So, and this is such a good job market. Wages are growing. So I think the theme makes a lot of sense, and that is why I'm surprised why the theme has not seen much of investor interest.
All right, well, do you own either one of these?
I do not.
Okay. So there is more ETF information always in the ETF section of our website, Zacks.com. Use the Funds tab in the top toolbar. It'll help guide you right to it. And the podcast tab at the bottom of the homepage is where you can link to Nina's podcast, ETF Spotlight. She does cover a lot of interesting topics there, in addition to what we do here on video, and talks with some interesting people in the ETF arena as well. With Nina, I'm Terry Ruffalo.